The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, ladies and gentlemen. Let me get my slideshow up here and moving. We have a really great presentation planned for you today. It's worth noting also that this presentation came about because of you. And, you know, on all of our training webinars, I always tell you guys, if you have any ideas for topics or, you know, particular items that you'd like to go over on our training, definitely let us know, send us an email, and we can usually make it happen. We're always doing research into all different sorts of things regarding business, online business, and so it's our pleasure to do that. So if you do have any type of topics for future training that you'd like us to go over, don't hesitate to shoot us an email, support@hcdesk.com, and let us know. We've got a presentation today, and again, my name is Mark Horn. I'm joined here with my brother Tyler Horn, and we've got a guest speaker, Ross Brunson, on the line with us too. Ross's company runs our accounting and does our books, and accounting is really the most basic framework of business. The thing is, it's kind of the side of business that no one really likes to talk about, but in the business world, accounting is one of those disciplines of study that literally all of us, regardless of job position, we should have some knowledge of. You know, its concepts can literally be applied to all job specialties, from secretaries using accounting skills to manage the company's checkbook and orders. Auditors have to study financial statements to evaluate accuracy and integrity of the business, and executives need to judge the actual success of our businesses using accounting statements from the past, present, and doing projections towards the future. They're just a few of the many possible positions where an understanding of accounting is absolutely necessary. Now, another reason why we should all have some sort of background in accounting, especially now more than ever, it's because in the business world, we're all held accountable for our financial practices, especially since the Enron crisis happened and Arthur Andersen failed to report that illegal accounting practices. Private and public companies are monitored very closely, and this stuff is really, really important. It's not the sexiest, headline of a training that we've ever done, but it is incredibly important. So I do encourage you to grab a pen and paper, take some notes. We are recording this, so I'll do my best to be able to provide you with that. But before we dive into it and I kind of switch it over, a couple quick housekeeping things. Remember, if you have any friends or colleagues that are in need of some mobile development or some daily deal software with our DDB platform or one of our other platforms, you can refer them to us, and if the person you refer to us ends up ordering, we can hook you up with an affiliate commission. So it can be a real easy way for you to generate some revenue if you do happen to know some folks. So, and of course, we would greatly appreciate that. That would be awesome stuff. On our last training, we talked about how the holidays are coming and how just last year the daily deal space was set to see between $80 to $100 million. That number is going to be much larger this holiday season. I can just about guarantee it. There's more and more folks that have smartphones that plan on doing their shopping, and more people are going to be opening up, coupons for massages and trips and things of that nature. It's just going to be growing. So definitely, I encourage you to get your holiday plan in place right now and start making a move on it, because November and December can be the biggest months that you'll ever have, and so I encourage you to plan accordingly for that. Now, also remember on the last training webinar, we talked about the new upgrade that we've got, the Scout Mob style free plugin. So basically, if you wanted to run free offers on your daily deal site, you can do that with this plugin. And to get that activated, you would just need to visit dailydealbuilder.com/plugins/free-offer. So I'll give you a quick second to write that down. But it is a pretty cool, unique way. And the way that Scout Mob does it is that for anybody that goes and basically downloads the coupon, the merchant pays Scout Mob, typically around 50 cents. And then for every coupon that's actually redeemed at the business, Scout Mob gets anywhere from like $1, $2, $3 for each of those coupons. So it's a really cool thing, and they're basically just giving away coupons, but it kind of opens up a bunch of new doors for you. So it's pretty cool stuff. So that's dailydealbuilder.com/plugins/free offer. And then the final thing before we dive right into it is that we are opening up our Platinum Coaching Program again. Our PCP program, as we call it, is a one-on-one coaching program that goes over an 8-week period. And if you are interested in that, I encourage you to go ahead and fill out the application. That's at dailydealbuilder.com/PCP. And then after filling out the application, it gives us an idea about where you're at and where you're looking to go. And then we'll basically contact you with more details. So that's a pretty cool program. And it is an 8-week long program where it's really intensive with, planned weekly phone calls and kind of like homework, if you will. But it's pretty good stuff. And that's just dailydealbuilder.com/PCP. So without further ado, let's go ahead and switch presenters. And I'd like everyone to give a big warm welcome for Ross here. Now I know your audio is muted. However, let's give it up for him. And let me get my GoToWebinar thing over here so we can switch the presenting screen. One moment. Okay. All right. Okay, Ross, I just made you the presenter, and once you accept that, then there we go.
Okay, so you can see everything all right there.
Yep,
from your
I
side.
see your screen, and just perfectly.
Okay, great. Appreciate that. As they mentioned, my name is Ross Brunson, and I'm excited to be here today to be able to talk with you and hopefully discuss some items that will be that you'll find to be very important to you in your business as you develop them and as they grow and become larger and larger. Excuse me. Also, as Mark mentioned, this webinar came about because of a question that one of you sent in, and the question really dealt with 1099s. The person said some clients won't know how to do 1099s or do all the day-to-day and end-user transactional work, including refunds and accounting reconciliation, and would you address that? So I'll try to address that really quickly here at the beginning, and then we'll move into the presentation I've got planned. Yes, it is. You are. If you were to hire a vendor to do something for you, this is somebody that's in business for himself and is not considered an employee of yours, and you have that person do work for you, and you pay him more than $600, and that work could be sales. So if he sells something, as an affiliate under you and sells some of your products for you, and you end up paying him over $600, you have to file what they call a 1099. It's an IRS form, and you would send that 1099 form to the IRS, where the IRS would be then notified that you had paid this particular individual this money. And to be able to do that, of course, you need to get W-9, which is also an IRS form, filled out by the vendor, and it'll give you hopefully his name, address, and social security number, or if it's a business, the business name, the EIN number of the business, and the business address, and that sends the you send that on with your 1099 to the IRS, and they then will monitor that person to make sure he reports that income on his personal tax returns. And then as far as the day-to-day and end-user transactional work, including refunds and accounting, most small businesses use a program called QuickBooks, and in the QuickBooks you would set up a chart of accounts, of course, and you would then allocate your income to various income categories and your expenses to various expense categories, and you also have refunds. That would be a category as well, and so those things are usually done quite easily through an accounting program. And as Mark mentioned, it's good for you to get some accounting knowledge, and if you don't have that, there's always lots of good accountants out there that be more than willing to help you where they can to make sure that that is all recorded properly.
Ross, I'm going to jump in real quick.
Helps answer that question.
And just wanted to say, for what you were just saying, that this could also be Let's say you run a deal on your Daily Deal Builder website, and you have an affiliate, maybe one of the businesses who actually drives you traffic as an affiliate, and then you cut them in some revenue. That also plays into effect for them if they're generating over the $600. It's the exact same thing for the affiliate side of thing too. Just wanted to throw that in there.
Yes, that's correct. Very good. Well, okay. What we want to talk to you today a little bit about is the subject of creditors and predators, and we want to introduce you to some concepts on liability and taxes. Protecting ourselves from creditors and predators is really becoming a big need that people, especially small business people, need to be concerned with today. The reason is our culture is really becoming more and more sue happy all the time. Before, just a few short years ago, 10, 15 years ago, attorneys weren't even allowed to advertise. Now you hear them advertising on the TV and radio all the time. Tell me, maybe any of these things sound familiar to you. Advertisements such as "injured at work," "call us for a free consultation," "no fees unless we collect." Or this is one, I think, an attorney in the Atlanta area, I believe, he said something like, "Call the Hawk after any accident. Aggressive attorney that works for you." And then here in our area, there's an attorney that uses, "Injured in an accident, one call, that's all. Call me now." Or then there's also the medical bills piling up. Understand your options and get money now. These are attorneys that are aggressively looking for people to sue, and they are, a major target of these particular attorneys, of course, are people that are in business for themselves. So we really need to think about what we can do to protect ourselves. Then, of course, our government can't seem to control its spending. We talk about the deficit that's just exploding at this point in time. We're already over $16 trillion in debt as a country, and as a result, they're talking about raising everyone's taxes, and that can be a very realistic possibility depending upon how the election turns out here. What might happen to us there, but we need to, because of these high deficits, we need to start thinking about, tax planning. What can we do, in the era of increasing tax rate? What can we do to perhaps help hold down our tax obligations, if that's possible? Of course, everything in life begins with a good plan, and so hopefully today, as we listen to this webinar, you're going to be able to get kind of the basics for a plan to help you develop yourself a financial fortress, and hopefully you'll be able to plan for some ways that you might be able to protect some of your assets and possessions. So today I would like to really briefly cover two major topics, the first one being liability protection and the second being tax planning. And so what I'd like to look at today is what is meant by the term liability, how we might incur liability, what can happen if we are held to be personally liable, and then hopefully we can also explore some ways to make ourselves unattractive to a plaintiff's attorney, which would thereby help reduce the odds that he might be willing to file a lawsuit against us. And also, hopefully we can use some of these same concepts to help us reduce our tax obligations as well. Okay, so throughout this webinar, we're going to be referring to what I call creditors and predators. So what do we mean by the term creditor? Well, a creditor, of course, is a person or an institution to whom we owe money. Most people have legitimate creditors, things like a mortgage lender, a utility company, car dealership. So we're all pretty much familiar with those. But what some people don't realize is that if we are ever sued by somebody, and if we lose, that person now becomes our creditor. And so as a result, some people end up with creditors they've never expected or intended to be associated with. So we need to be a little concerned about, our business actions and what it is that we do out there, so that we can, limit the number of creditors we might find ourselves being subject to. Threats to our wealth comes from many different directions. There's danger of legal liability, and financial disasters are always strong regardless of our lifestyle, occupation, or how careful we are. We might be going along minding our own business, and the next thing we know, we might find ourselves in the midst of a lawsuit. I happen to know an individual who was just driving down a highway in the state of Utah. It was kind of a downhill slope, and as he was going, the car in front of him was cut off by a person who was in the lane beside that car trying to change lanes. That car was cut off. The car went into the median in the middle of the road, bounced back, and the driver's door was facing uphill, and he was coming downhill, and he ran right into that into the driver's side door. He was only doing 65 miles an hour, but it happened so quickly in front of him he couldn't stop. He hit that car doing 65 miles an hour right in the driver's door and killed that person instantly. And so one second he's minding his own business, just driving down the road, and the next second he's killed somebody. So we have to be careful. These type of things can happen, and they can happen to all of us. We need to try to minimize our danger, but as I mentioned, it's pretty tough to avoid it completely. There's just too many ways for us to get into trouble, and unfortunately there's just way too many attorneys out there. I understand that there are usually at any given year, about 130,000 new attorneys graduating from colleges across the United States. So there's always a huge amount of attorneys, and they're hungry and they're looking for work, of course. And as a result, most people will agree that our legal system is currently out of control. Let me just read you a few facts about our legal system. The U.S. legal system is the most expensive in the industrial world. The U.S. legal costs are currently as much as 2.2% of the gross domestic product of our country. Cost of litigation in the U.S. currently surpasses more than $867 billion each year. It drastically increases the cost of services, goods, and health care, and forces thousands of Americans out of jobs each year when the companies they work for are forced into bankruptcy or massively downsized due to adverse litigation. Most dramatic is the estimate of approximately 30 million lawsuits that are filed each year, and that's over 182,000 lawsuits filed each day, or one every 2 seconds. So with 30 million lawsuits filed each year, and with approximately 300 million people, your odds are about 1 in 10 that someday each one of us will be a target of a lawsuit. So with these 30 million lawsuits being filed each year, how can anyone be certain that they won't be hit with a lawsuit from an auto accident like we just mentioned, or perhaps a whopping tax bill, or a divorce? Many times those things are unexpected for one party or the other, and that could cause your assets to be split up. Bills that we can't pay. Maybe it might be a hospital bill, an unforeseen hospital bill that we might all of a sudden find ourselves responsible to pay for. Creditors' claims from a failed business. Many of you are starting up businesses. You might have to borrow money down the road, and if your business fails, you might find yourself in a lawsuit from someone who lent you some money for your business. Maybe a breach of a contract. You go into contracts, enter in contracts in business all the time, and if you don't uphold your end of the deal, you might find yourself subject of a lawsuit. Foreclosure, or another one, governmental seizure of your property, trying to get that property back. So since we can't guarantee our safety, our only logical option is to anticipate trouble, so we need to protect ourselves before it's too late. The second term I wanted to talk about is a predator. A predator, of course, is an organism that feeds on another organism. But we also have out there what I call predator plaintiffs. Those are people who actively seek for opportunities to force someone into court in the hopes of taking money and financial assets from him. And yes, there really are people out there that try to make a living by faking injuries and suing, for their medical bills and their pain and suffering, of course. And every now and then they hit the lottery and they get a punitive damage award that sets them up for life. I actually knew a person like that. He used to tell me stories about how he would go to supermarkets supermarkets and stores around, and he would look for aisles that were freshly mopped or for aisles that maybe had litter in them, and he would walk down these aisles and he would trip and slip and fall, and he would then of course be injured, and he would try to extort some money out of the store owners for his injuries. One time, this was interesting, he was telling me this story. One time he needed an oil change on his car, and so he went to like a local Jiffy Lube oil change facility, and while he was there he was noticing how busy the place was, and cars were lined up to get in, and so while his car was in there being worked on, he kind of slipped out the back, and he was waiting for one of the bays to open up, and when it did, one of the attendants were getting ready to drive one of the cars into that bay. Well, he watched, and as that car started to back up, he walked intentionally right behind the car and was hit by it. And then, of course, it wasn't traveling very fast, but of course he slapped the car and made a bunch of noise and fell on the ground and was in just all kinds of pain and agony. And before long, the poor owner of that facility was sued by him for the injuries that he sustained. Unfortunately, those type of things happen. To show you just how out of control our legal system is, let me read to you a write-up of an actual case that was tried in Charlotte, North Carolina. I call this the cigar lawsuit story. A lawyer purchased, get this, a lawyer did this. A lawyer purchased a box of very rare and expensive cigars and then insured them against, amongst other things, fire. Within a month, having smoked his entire stockpile of these great cigars, the lawyer filed a claim against the insurance company. In his claim, the lawyer stated the cigars were lost in a series of small fires. The insurance company refused to pay, citing the obvious reason that the man had consumed the cigars in the normal fashion. The lawyer sued, however, and won. Delivering the ruling, the judge agreed with the insurance company that the claim was frivolous. The judge stated, nevertheless, that the lawyer held a policy from the company in which it had warranted that the cigars were insurable and also guaranteed that it would insure them against fire without defining what is considered to be unacceptable fire, and was therefore obligated to pay the claim. Rather than endure a lengthy and costly appeals process, the insurance company accepted the ruling and paid $15,000 to the lawyer for his loss of the cigars that perished in the fires. Yeah, can you imagine that?
That's crazy.
$15,000. But this is great, what the insurance company did back to him. After the lawyer cashed the check, the insurance company had him arrested on 24 counts of arson. With his own insurance claim and testimony from the previous case being used against him, the lawyer was convicted of intentionally burning his insured property and was sentenced to 24 months in jail and a $24,000 fine.
Oh my God.
No wonder the rest of the world thinks we're nuts, huh?
Yeah, that's crazy.
Yeah. So there are ever-looming predators out there, and so we need to, to take steps to protect our assets, and we need to take steps that will help shield our wealth and any wealth that we might have, and to also help to discourage, lawsuits. So you might ask today, what is this seminar really about? Well, it's really about two things. The first one is about keeping more of what we earn. It is said it's not how much you make, but how much you are able to keep. That's a concern. How much of what we earn are we able to keep? And second is discovering and implementing the methods proven to be able to protect what we have accumulated. Now, this information is critical to us. If we want to have a better life now, we want to have money to help sustain our standard of living. We want to be able to save up some of that money so we can have a comfortable retirement. And most of us, especially those that are married and have children, want to be able to pass on some of the things that they were able to secure and earn during their lifetime to their children and grandchildren to help them secure a better lifestyle. But unfortunately, there are many roadblocks to us being able to keep what we earn. And the first one is by far the greatest of them all. And that is our ability, the first roadblock is government taxation, consisting of federal taxes, state taxes, county taxes, and in some cases even city taxes. We're taxed on just about anything and everything we do. But I'm not going to talk too much about things like sales tax and those, property taxes, even though those are high. What I want to talk about a little more today is income taxes. With all of our various government agencies' inability to control their spending, our tax rates are going to continue to rise. They've got to if we're going to be able to pay off $16 trillion. And of course, due to our politicians' inability to control themselves, they just can't seem to vote the right way to stop some of this excess spending. As a result, we Americans are going to spend more this year in taxes than we will on food, clothing, and housing combined. That's amazing. And it is not uncommon for tax liability on a person's income currently to reach as high as 40 to 45% when you include federal and state and perhaps city in some cases. And this is before factoring all the other taxes I mentioned, that we find ourselves subject to. The second major roadblock that is to our ability to protect what we've been able to accumulate. This is the legal concept of liability. Unless you have had experience with in insurance somewhere, as maybe a insurance adjuster or an insurance agent, or if you haven't been involved in a legal matter, or if you're not part of the legal system, you may not understand the significance of this legal term liability. So what I have here is a real brief history that I'd like to kind of read to you real quickly about how the concept of liability came into effect and how it's evolved through the years since the beginning of man. It says here, many thousands of years ago, in the dawn of civilization, mankind lived under the natural law of survival of the fittest. And that, of course, means that if you were bigger and stronger than somebody, you would take what you wanted from that individual, and that person could do nothing about it because he couldn't defend themselves. So at that time, if you were attacked or if your property was threatened, your one recourse was to fight to protect yourself and your property. If you felt you wanted your neighbor's property, and if you were bigger than he was, you would simply take it. If you were big and strong enough, you could survive under your own measures. If you happened to be smaller and weaker, however, your survival was not at all certain. As you can imagine, having your survival depended on the size of club you were able to wield or how ferocious a fighter you were, made for a very difficult and short life. The young and the old were especially vulnerable and left with little or no protection. As mankind progressed, we realized that there was safety in numbers. So to ensure our survival along with the aged and the weak among us, we began to band together, first in families and then tribal groups of extended families. As certain tribal groups became larger and more powerful, the natural law of survival of the fittest was still prevalent as they continued to attack smaller groups to get gain. The realization finally came that the only way that the natural law of survival of the fittest could be overcome was by banding together of the majority of these family tribal groups into a community. Through the strength of a large and extended group, the barbaric law of survival of the fittest could finally be put to an end. Rules, they figured, could be put in place to protect the life and property rights of all members of the group. The young, the weak, the old could be protected from those who would hurt or take advantage of them. If a member of the group should be attacked or their property taken, no longer would that person be expected to pick up a club or a sword or a gun to protect their life or property. Instead, authorized members of the group could use their combined strength to provide protection to all the members of the group. Finally, the natural law of survival of the fittest was defeated. Or was it? It says now, with the authority to enforce the rules centralized in one person or a small group, kings and dictators began to rise up. And many times these people find themselves back in the same condition they're in. These kings and dictators would use their powerful positions for their own gains. If a king or dictator was benevolent, the people were treated kindly. But in most situations, this concentrated power led to pain and misery. The people suffered just as they did under the law of survival of the fittest, except that instead of a neighbor using a big club to take a weaker person's possession, it was now their leaders that were able to take their possessions from them. Finally, a new concept emerged, the idea that rules could be agreed upon that every member of the group would have to obey, even those that are in charge of enforcing them. These rules became known as laws. As a result, the system became known as the rule of law. As laws were created, the lawmakers felt that each individual had a duty to live his life in such a way so as to not injure another person or destroy another person's property. That's an important concept, that term duty. We're going to talk about it more in the next slide or two, but let me repeat that. Each individual had a duty to live his life in such a way so as to not injure another person or destroy another person's property. Governments were created specifically to enforce these laws and protect the life and property of the members of the group. Powers within the government were intentionally separated so that all the power could not end up in the hands of just one person, thereby eliminating kings and dictators. Because of this new concept, multiple communities have been able to band together into nations, and governments are a recognized part of our lives. Today, if someone is injured or their property is taken, no longer can they pick up a large club or a gun and go out looking for justice. Instead, they must work through a law enforcement agency and court system to obtain remedy for their loss. So that's sort of how the concept of liability developed over the ages. Let me talk. Now we want to do is under the rule of law, there is a really important concept, and that, as I mentioned, just a few minutes ago, that concept is the duty to another person. So the rule of law that we live under today is based upon the concept that each of us has a duty to live our lives so as not to injure or damage the property of another. Everyone is subject to this duty, even those in high offices such as the presidents or sheriffs or judges. We all have this same duty to live our lives so we won't hurt or damage someone else's property. The duty and liability go hand in hand. If a person violates his duty imposed by general law resulting in injury or property damage, that person could be found responsible, or what we call liable, for those injuries or for property damage of another person. So the word liability denotes really responsibility, and the duty denotes our obligation to live responsibility amongst our fellow citizens. So if you violate your duty and become responsible for another person's injury, in legal terminology, you are then liable for those injuries. So if a person is injured or suffers property damage at the hand of another, under the rule of law, our current law requires that the person responsible or liable for damages to make the injured party whole again. In other words, under the rule of law, if the responsible party becomes personally liable, that means they themselves are liable for the property damage or injury of another, all their money or their personal assets become available to be used to compensate the injured party. You get that? So if you injure somebody, you violate your duty, you injure somebody, or you damage their property, under the rule of law, you have an obligation to pay what is necessary to make that person whole again, so that he technically won't have had to have suffered that loss at your hands. But now you might say, what happens if the responsible party refuses to pay? Well, under the rule of law, you don't go pick up a sword and go out there and force him to, or a club and beat him to death. Instead, you take the matter to court and you can sue for the damage. And of course, the court will hear the dispute and will make a ruling. And if the court does feel that that person was in fact responsible, or what we call personally liable for that other person's damages, then the courts will award what they call a remedy, or an arrangement by which the injured person will be made whole once again. And that remedy usually consists of taking money from the responsible or liable party and giving it to the injured party. Well, now you might ask, what happens if the injured or the responsible party doesn't have enough money to cover the damages that he causes, or to the property or injury to the other person? Well, again, the courts come into play, and what they can do, and what they do is they will take the personal possessions belonging to that individual and take them from them, and they will liquidate them, sell them, and they will give the proceeds to the injured party. So the fact that our society has given the rights of all citizens suffering a loss to seek redress in a competent court of law has, one, removed the need to seek for justice at the point of a gun, And 2 has guaranteed all men the right to life, liberty, and property regardless of your age, your strength, or your size. So you can see it's a good thing that we have this rule of law. The rule of law, replacing the existence of the natural law of the survival of the fittest, has moved civilization a giant step forward into an age of equal rights and equal protection under the law. The rule of law has been extremely beneficial to the progress of civilization and to the individual citizens of those societies practicing it. Okay, so that gives you kind of a brief history, an introduction to the term liability, duty, and to becoming personally liable to someone for an injury that you might cause them. Okay, now, as we mentioned, if you do become personally liable, you have to make that other person whole. There's a real financial drawback to the rule of law if you happen to be the person that has injured someone else. And as we mentioned, you do have that obligation to make them whole. And of course, no one really wants to run from their responsibilities. And most people are usually willing to try and pay for the legitimate damages that they've caused to another party. But as with all these attorneys that are graduating every year, and with the litigious society we're finding ourselves in nowadays, and these predator plaintiffs that are suing people trying to make a living, we're finding that these awards that are being given by the courts are becoming higher and higher, and it's getting harder and harder for these people to be able to to compensate those people that they've injured, and so that's becoming kind of a real problem. Anyway, we want to talk about some of the traps here that we might face, and threaten the wealth that you are trying to accumulate. First of all, the first one might be divorce. Marriage is a beautiful thing, but unfortunately, it only works about half the time right now in our country. And at the time of divorce, family assets must be split up or sold. Taxes. IRS tax audits could leave you with a large assessment for taxes, penalties, and interest that you are unable to pay and are not dischargeable in bankruptcy. You can't even take out bankruptcy to get rid of them. And of course, the cost to challenge IRS in court is prohibitively expensive for most people, and their assets are usually frozen by the IRS if you choose to try to grind your way through the court system. I once had a family that I knew that I helped. They hadn't filed their tax returns in about 3 years, and they came to me and they asked if we could help them. They decided they should probably pay those taxes, and if we could help them fill out their tax returns for the 3 years that they missed. And so we did that. We helped them, and we compiled all their income and all their expenses, and we did the tax returns for the 3 years, and it turned out they only owed a combined about $3,000 for all the 3 years. And so they took the tax returns, signed them, sent them in. The IRS looked them over. The IRS wrote back and said, okay, this is good. We'll accept these tax returns. We'll agree to the $3,000, plus we want a little interest, and we want, charge you some penalties for not filing on time. And so they sent that back. And at that time, the family that we were working with changed their mind. And they decided that they didn't feel that the government had the right to tax them. And so they sent the letter back to the IRS, their letter from the IRS back saying, we're not going to pay these taxes. We don't feel you have the right to be able to tax us, and we're not going to pay it. Well, immediately the IRS, what they did is they then disallowed every single deduction that they had claimed in those 3-year periods of time, and only looked at strictly the income the 3 years, and then they hit them with additional penalties and interest, for refusal to file and refusal to pay and different things. Well, anyway, when they got everything said and done, they all of a sudden had their tax bill went from $3,000 to $100,000. If you can imagine that. And the family fought the IRS for several years, and the dad even ended up going to jail over the matter. But in the end, they finally released him, and he got, on the grounds that he would come out and he would agree to pay his back taxes, which he ended up doing. So, taxes can definitely be a hindrance to us being able to accumulate wealth here. Accidents and medical expenses are another trap. unanticipated medical bills for you and your family member that are not covered by your health insurance policy can become staggering. We once needed some work done at our house, and the company we contracted with sent out a worker that appeared to be in his late 70s. And as he was working around our house, my wife went up to him and she said, "Boy, you seem to be kind of old to be working. Shouldn't you be retired by now?" And he told her kind of a sad story. He said that his wife had contracted cancer and had a long, lengthy hospital stay that used up all of their money and pretty much every cent that he had, and she finally passed away with the cancer, but left him with this huge, staggering hospital bill that he said he would never be able to pay off. And as a result, they took pretty much everything he had, and he was stuck now having to work even in his late age just to be able to stay alive. Accidents also can have a devastating effect on our ability to accumulate wealth. Let me tell you a quick story here. Back in 1970, there was a delivery truck for a company called the Langendorf Bread Company that was founded and stationed in San Francisco, California. They were involved in a traffic accident. This resulted in a lawsuit which was decided in favor of the plaintiff, for the person that was hurt in the accident. And this was one of the first large damage awards, and it opened the floodgates of damage awards far in excess of reason, fairness, and facts. And we mentioned that earlier, that's one of the problems that we have with the rule of law and with liability, is that we can end up being required to pay huge amounts of money that may be greater than what the damage we caused. The amount of this award that was given to the plaintiff ended up bankrupting the Langendorf Sourdough Bread Company. They were, because of this traffic accident, the damage award came to $18 million. Lawsuits, which are often frivolous, are another liability trap that can keep us from holding on to what we earned. Let me read to you summaries of two different lawsuits that help bring about this point. There was a woman in Texas that left her cigarette burning in the car. Not surprisingly, the car eventually caught fire and injured her child. Do you think that she would blame herself? No, of course not. She sued the tobacco company for not designing a cigarette that would stop burning. That's incredible. Here's another one. Here's an example of a youth baseball coach that was sued. For a youth baseball coach, what could be worse than going 0-15? He lost every game. Ask poor Rodney Carroll. Soon after Carroll guided the Brunswick Cobras, which were from Brunswick, Ohio, to a winless season in 1999, a summons arrived informing him that he was being sued for $2,000 by the father of the catcher of the team. The complaint in the lawsuit was for poor coaching. Carroll's incompetence, the lawsuit claimed, cost the team a trip to a tournament in Florida. I don't understand it, says Carroll, a 43-year-old street maintenance worker who had volunteered for the past 2 years as the coach. After receiving notice of the lawsuit, Carroll stated, "I just wanted to be a coach so I could help kids." So as I mentioned, you just never know what might end up being a lawsuit and how you might be brought into it. Another trap is products and malpractice suits. A products liability lawsuit would normally result if you created and sold a product to someone who became injured while trying to use it. What may be surprising to you is the fact that you can be held liable for injuries for as long as the product is in service. Again, let me read to you a summary just of a couple quick lawsuits that support this position. There was a 50-year-old winch. A winch is a machine that winds up a metal cord, and it is used. You hook a winch line onto something and you pull it. And this winch was 50 years old, and a safety guard was missing, and it was being used by a sailor, and he had an accident in the course of using that winch, and he ended up suing the manufacturer. And again, this was 50 years after the winch was made, and the dollars awarded him bankrupted the manufacturer. So those of you that create products to sell, you've got a liability trail that will follow you for pretty much ever. Here's another one. A worker was injured using a meat grinder, again without a safety guard in place. The grinder, first sold by the manufacturer to the U.S. government back in 1957, was privately owned when the injury occurred. Almost 30 years later, yet the manufacturer was still sued. So this was a case where the product was being used not even by the first person that bought it, but by a second person that had taken control of it, and it was 30 years after the meat grinder was sold in the first place. And finally, an Oregon dairy farmer helped his neighbor for 2 hours with some electric wiring at a neighbor's barn. Eight and a half years later, the neighbor's hired man was electrocuted out in the barn. The hired man's widow sued the kind neighbor for $1.5 million. Malpractice. Malpractice suits can arise when a client follows either yours or one of your employees' directions or advice, and as a result becomes injured, loses money, or their property is somehow damaged. If you have a business that sells informational products, some of you may have a business like that, you might find yourself in the middle of a malpractice lawsuit if someone follows your directions and they lose money or feel that they are injured in some way or another. Employees, this is a big one. Many of you are probably just starting off in business, but if some of you have employees or are looking to get employees, employees are a real major liability trap. An employer can be sued for sexual harassment, discrimination claims. Employment lawsuits are currently on the rise, and the average amount to settle them has increased. These trends are expected to continue, exposing businesses to greater liability from private suits. Here's an example, and this wasn't even, this was a case of a person that was employed in the person's residence, wasn't even a business employee. There was a maid who was employed in Grand Haven, Michigan, who sued a condo owner for $25,000. This was after she stole one of his fireworks. The woman took the firework home and she put it on her dinner table and she lit it, and it injured her, and she originally thought that it was a candle and not a firework, and so when she lit it she was quite surprised and she was injured, and she claims that the owner should have had a warning on the firework because she thought it was a decorative candle. This was a candle she stole from him, and yet she was suing him for $25,000. Business failures, personal loan guarantees can take from us that which we have worked hard to earn. You might sign as a personal guarantor for a business startup loan, or over time, if the business fails, you could still be responsible for the repayment of the loan plus interest. A new threat that is quickly gaining a great deal of power is government agencies with forfeiture powers. Over the past 20 years, federal governments have quietly increased its police power to confiscate your real and personal property. And right now, it comes under the guise of, trying to put a bite to crime. You might get a person that was a drug dealer, and so they find that he was dealing drugs out of his car, and so the government can seize his car and they can sell that car. They could take it without any type of recourse on the previous owner. They could take it, they could sell it to help cover the expenses of prosecuting the individual. Well, this happens all the time, and there are currently over 100 different federal forfeiture statutes designed to cover any kind of misconduct, whether it be criminal or civil. All they have to do is allege that the target asset was somehow used or involved in some ambiguous criminal activity, and the asset can be seized without notice. Okay, so with creditors, predators, and governments after our assets and our earnings, what can we do to keep more of what we make, and how can we protect what we have? So those are the two questions we brought up earlier. Well, now we're getting to really the meat of this webinar here today. I'd like to welcome you to the exciting but complex world of entity structuring. You might ask yourself, what in the world is he talking about? Entity structuring. Well, entity structuring, an entity might be something like a corporation or a partnership, or it could be a limited liability company. That's what when I refer to the term entity, that's what I would be meaning. An entity structuring consists of building structures around our assets. In other words, putting like a corporation around our assets so that it would be more difficult to penetrate and be able to seize that asset. So these structures, as I mentioned, we call them entities. And just as a structure of a home properly built will protect to its occupants. Entities properly structured will provide protection for the business assets and personal assets that are dwelling within them. So will proper structuring provide answers to our tax and liability problems? The answer is an resounding yes, they will. So when it comes to entity structurings, there are 9 entity types to choose from. Each entity has its own characteristics. Each has its own strong points. Each has its own weaknesses. So it is important that before you choose, it is important that you understand what the strong points are of each one of these entities and what the weaknesses are. And you need to understand what it is that they were designed to do, because they are designed to do different things. And so it's not like one size fits all. You know, everybody should have an S corporation, or everyone should have a C corporation, or everyone should have a limited liability company. A lot will depend upon what it is you're trying to accomplish. Are you trying to reduce your taxes? Are you trying to reduce the liability that that you might feel that you're might be liable for or prone to, based upon the type of business that you are operating? So you need to understand these, and you need to understand their characteristics. And if you don't understand them, it might be wise for you to get some advice from somebody who does understand them before you make a choice and just arbitrarily jump into one or another. Okay, so in order to understand the taxation of the 9 business entities, one must understand, first of all, that there are 3 types of income, and that there are 3 ways that income can be taxed. Okay, we want to delve real quickly here into the 3 types of income. The first one is what we call active income. It is also, you would consider, wage income. So if you're employed by an employer and you get a check each week or every 2 weeks on payday for the work you do for them, that would be considered wage income, or also known as active income. But also, if you just happen to be a sole proprietor, or if you're in the middle of a general partnership, the income that you receive, or the profits that you receive out of these businesses, would also be considered wage income. Then there is passive income. Now, passive income really is more of money that is earned in activities where you're not actually participating in, or you might say it's more money at work as opposed to a person at work. So a good example of passive income might be rental income. You know, you put your money to work, you buy a rental home, you buy the house, you put it up for rent, you receive income from the rent of that home. It's the money that you have invested in that home that is at work, and you are receiving passive income. And those are usually shown on a person's Schedule E on their tax returns. And then you have portfolio income. You all have heard of the stock market, of course, and the ups and downs of it. People invest in the stock market. They put money into certain stocks, hoping that they're going to go up in value. If they do go up in value, they may want to sell them, and then they take the gain, and they would call that a capital gain. And so capital gains are a part of portfolio income, and those are usually shown on a Schedule D. So one thing you need to understand is that each type of income is taxed differently. And I want to take a minute to just look at this active income, wage income, because so many of you are going to find yourself subject to this if you haven't taken the time to set up an entity structure of some sort, and you're just operating out of a Schedule C environment. Active or wage income has multiple taxes applied to it that the others too don't have. For example, the main one is self-employment taxes. All wages are subject to approximately 15.3% self-employment taxes. Now, this is what it has been up until recently. President Obama has reduced that just a little bit, but it's scheduled to go back up again come January 1st. So I've just kind of left that figure 15.3 as kind of a general figure, to help illustrate what it is we're talking about here. But of this 15.3, if you work for an employer, your company pays 7.65% of it, and then you have taken out of your pay 7.65%. But if you are the employer, which many of you probably are employing yourselves, you have to pay both halves of that, or you'll be paying 15.3%, or about 15 cents on every dollar of profit you make. You're going to have to pay in self-employment tax, in addition to some other taxes taxes, one of them being income tax. We'll look at some of those other taxes in just a minute. Now, distributions that could be considered as waged by the IRS. Let's say you were set up as a sole proprietor. Any distributions of profits coming out of the sole proprietorship or out of the general partnership are considered wage by the IRS, and you are subject to this 15.3% self-employment tax. And distributions out of a limited liability company, an LLC, are also subject to that tax. And most people don't realize that. And most attorneys will usually say you should set your business up as a limited liability company. But what the attorneys are not aware of or don't seem to understand is that places the person who set up as a limited liability company in the position of having to pay this self-employment tax on every cent of profit that they make up to these, the self-employment limitations, which are about $106,000 at this point in time. So let's look real quick here. Taxation of active income as compared to passive income. We talk about wage income and all the taxes associated with it. If you look at here on the left-hand side, we have federal withholding tax, Social Security tax, the employee portion, Social Security tax, the employer portion, Medicare tax, the employee portion, Medicare tax, the employer portion, federal unemployment tax, which is called FUTA, workers' compensation tax, state withholding tax, state unemployment tax, which is called SUI or SUI. And then in California and some other states, they have employee training taxes. So you look at all those taxes that active or wage income is subject to, whereas if you look at the passive side of things, you basically have federal withholding and state withholding. So if we can set ourselves up in a position where we can eliminate as much as possible the active or wage income and receive that income as passive income, we can definitely reduce some of the taxes that we are required to pay. Okay, the next thing that you need to understand is that there's also three ways that income can be taxed. They can be taxed at the source. There's pass-through taxation and double taxation, and I'll take a minute here and try to explain these real quickly for you. First one, taxed at the source. That would be, let's say you were a self-employed individual and you were a sole proprietor. You are your business. Business is you, the income that you receive is yours, it's the business, and so the IRS will tax you at its source. In other words, you personally have to pay the tax on that income. Or a general partnership, the same thing. You are taxed at the source. The second one is a pass-through. And what that means is, let's say you have an entity, and let's say that entity happened to be a limited liability company. Well, the limited liability company itself, if it's taxed as a partnership, does not have to pay a tax on its profits. Those profits are passed down to the owners or the partners in that partnership, and the tax is assessed at that level. So the entity does not pay a tax, but the owners do pay the tax. They would call that a pass-through taxation. And the third one is a double taxation. And that would be, there's really only one entity, and that would be a Schedule C corporation. The Schedule C corporation, on any profits that it makes, has to pay a tax on that money every single year, both federal and if there's a state tax where it's located, a state tax. And then if the stockholders decide to take money out of that corporation, they then are taxed again. And that would be a portfolio type of income, as we mentioned above in the different types of income. That would be a distribution out of a corporation that would be subject to a tax, so they have a double tax. But it may seem straight, oh yeah, I can figure this out. There's only three ways, three different tax methods. That seems obvious to me. I can understand that. But the problem is profits taxed at the source may or may not be subject to the 15% self-employment tax, depending upon the entity that you choose. And the pass-through of profits may or may not be subject to the 15.3% self-employment tax. For example, we mentioned the LLC. Distributions out of those are subject to the self-employment tax, but distributions out of an S corporation are not. And so you have to understand these three different taxing methods and how they apply to each individual entity before you make the decision as to which entity it is you would like to operate within. Now let me give you just a quick example. You might say, well, what is all that, how does that affect the actual tax that I'm going to have to pay at the end of the year, depending upon which one of these methods I choose and the type of income I'm earning? Well, what I'm going to do here is just take an example. Let's say that we have an income of a married couple. They have two dependents, just the husband and wife, that's it. They have $100,000 of income, and so their adjusted gross income, there's nothing taken out, their adjusted gross income is $100,000. Let's look at different scenarios and how this example would be taxed. The first one is taxing at the source. Again, we mentioned that as being a, perhaps a sole proprietorship, or perhaps also a general partnership, or, well, we won't mention C corporation because that's shown below, but tax at the source, the tax that that particular family would experience would be $26,251. Now, if they had a pass-through organization, sort of like an S corporation or a limited partnership, the taxes would actually only be $13,869. The difference being that self-employment tax that we mentioned, the 15 cents on every dollar of profit, because these ones are taxed that way. Where the sole proprietor is, we're able to reduce the tax liability substantially. A limited liability company, though, look at that. It's the same as a sole proprietor. It's taxed at $26,251. So it can be taxed at the highest levels possible if you have a limited liability company. Why? Because its distributions are subject to the FICA and Medicare taxes, and that's the additional tax you find yourself subject to there. And then look, the double taxation, if we add both taxes together, that person, if he had been operating in a C corporation, his tax obligation would be $28,558. So you can see the choice of entity that you choose to operate within can have a vast difference on the amount of taxes that you're going to have to pay. Now what I'd like to do is take a quick second and just introduce you to a special deduction that you can take advantage of once you do have some sort of an entity established, and that can provide also great tax savings for you. And this particular deduction, like I say, is not well known, but it is actually listed right in the IRS code. It's section 280A, subparagraph G, and it's the home use special deduction, and it can be quite, like I say, quite valuable to you if you understand this. And it says, for certain rental use, if a dwelling unit is used during the taxable year by the taxpayer as a residence, and such dwelling unit is actually rented for less than 15 days during the taxable year, then the income derived from such use in the taxable year shall not be included in the gross income of such taxpayer under Section 61. So what does that mean? That means that if you have a home and you rent that home out less than 15 days in a year, and you receive rental income for the rental of that home, you get to claim, you get to take that income, and it's not going, you do not have to claim it as income on your tax return. So it's basically free income. And so how can this help us, you might say? Well, let's say that you have a corporation that you're doing business through, and that corporation needs to hold a board of directors meetings one day a month to be able to plan out the month's worth of activities. Well, that corporation needs to rent a location to be able to do that. Well, wouldn't it be nice if they could rent your home from you for that day? And let's say they paid, let's say the going rate that particular time was $1,000 a day to rent a facility, to hold a meeting in. You'd be able to claim $1,000 of income, and that $1,000 you would not have to declare as income to yourself, and you wouldn't have to pay taxes on, yet your corporation would be able to get a write-off for that $1,000 as a legitimate business expense. You might say, wow, where did this thing come from? Well, it came about because of the IRS, looking at situations that occur when Olympics came to a U.S. city, or the Super Bowl or something like that would come to a U.S. city. People were coming from all over the world to be a part of these events, and they needed places to stay, and there weren't enough hotels around. So people started renting out their homes to these people as they came in. They'd rent them out for 14 days, 15 days, for 2 weeks or whatever during the Olympic time, or for a week or so during the Super Bowl activity that were going on, and then the IRS were coming along and saying, well, we want you to claim that as income. Well, then these people would say, well, then we want to depreciate our home during that time. We want to write off all of our utilities. We want to, write off our interest on our, on all on the mortgage that we have to pay and all the other expenses that go along with renting a property. And so what the IRS finally did is they said, well, okay, we'll just come to an agreement on here. We're not going to charge you. We're not going to make you claim it as income, but then you're not going to be able to write off all the expenses. And as long as it's not more than 15 days in a taxable year, then we're going to be okay with it. So this is something that you would want to talk to your tax advisor about, and they could help you, get that going, and you can hopefully take advantage of that. Let me give you some examples. If an S corporation, that same example, that person took advantage of this, rented out his home 12 days a year, and then for corporate for corporate meetings, or if it had been an annual meeting of a couple times a year, it was able to rent it out for 14 times out of the year, or 12 times out of the year, one each day each month. They're able to save about $3,500 in taxes. A C corporation doing the same thing, renting a home from the stockholder, he could save about $4,760 in taxes a year. And I showed a limited liability company could use this to save maybe around $4,480 a year. So it can be quite a significant tax savings for you if you utilize it correctly and properly. Okay, one of the things that many small business owners find themselves in is, when they start into business, they find that after a short period of time, they start running out of time. There's just too many hats for them to have to wear, to be able to run their small business success rate. Let's just look at some of the hats these small business men are required to wear. They have to be the marketing arm, the production and service arm. They have to do the billings. They have to do their accounts receivables. They have to pay their bills. They have to do their payroll. They have to take care of their accounting. They have to do quarterly taxes and tax returns for the payroll and the end of the year. They need to worry about tax planning so they're not paying more taxes than they need to. They need to understand business structuring to help them ward off liability and tax and help them reduce their tax liabilities. They need to understand, if they do set up a business structure, how to operate within that business structure. This causes great fluctuation in the company's income and growth because they can't spend all their time marketing. They're stuck with all these other things that are necessary and important, but are not necessarily productive as far as producing income for the business. So what can a small business owner do to free up some of his time? Well, here's some possible solutions. They can hire a tax attorney to operate, help them run their taxes and their business, at about $250 an hour. Or they can hire a CPA. Most CPAs these days are charging about $150 per hour. Or they can hire a full-time bookkeeper, which, full-time, you might be paying that person as much as $2,400 a month. Or maybe they want to get a part-time bookkeeper. They could be paying as much as $1,200 a month. The smart solution really would be to try to find a virtual accounting and legal office that you can consult with on your business structuring. There's another important thing that you need to understand here. You might go to an attorney and you might say, I've decided, after all my study, that I want to be a limited liability company, or I want to be an S corporation, and the attorney says fine. He goes about and sets up all the documents. He does a great job. He gets it all filed with the state and everything he needs to do. You come in, he hands you a stack of papers, folders and binders, pats you on the back as he's walking you out the door and says good luck. And all of a sudden you walk out the door and you say to yourself, I have not a clue what I need to do next. How do I pay myself? How do I pay my employees? How do I get money out of this thing? What do I need to do? Well, that's a problem. There's not many people out there that are willing to sit down with you and to educate you and work with you and to review what you're doing to make sure that you understand how to operate properly within that new environment that you find yourself in. So as you look for this virtual accounting legal service, you might want to look for someone who can do that and is willing to do that for you. You'd also probably want a company to help you do your monthly accounting, payroll, and quarterly taxes. So that's not something that'll be, on your plate all the time. Someone who can help you do your yearly business tax returns, and hopefully you can find a business that can do this for you and still offer you low monthly rates. Well, here I happen to be involved with a company called BookEase, and let me tell you a little bit about our company real quickly. With BookEase, we're associated with a major law firm, and this law firm is set up to help our clients specifically to understand which entities are right for them and which entities will work best for them. Then in addition to that, we are a document assistant company specializing in legal document preparations, and we offer services to help provide our clients services to help get their legal documents drawn up at a greatly reduced price over what a law firm might want to charge them. In addition, if we are given the opportunity to do the monthly accounting, we can give you the guidance and directions as to how to properly operate within your new business structure. And this is, like I mentioned, is quite an important thing, especially at the beginning. A lot of times mistakes are made, and if those mistakes are not corrected, you can be found commingling funds or other things that can actually destroy the liability protection that you've tried to purchase through the entity that you've had set up. And finally, most tax preparation offices charge as much as $500 to do a business tax return and $175 to do a personal tax return. But we offer a special bonus. We want to offer a special bonus to all those listening today to this webinar, where if you allow us to handle any of your monthly accounting for you during the course of the year, that we will be willing to prepare your company tax returns and also your personal tax returns free at the end of every year. So that's a savings of $600–700 a year, and if you find that you might have to operate in more than one entity, it could be a savings of thousands of dollars a year. So if you have any questions, please feel free to contact us. Our company's called BookEase, at either the office phone listed above here or the email address on the screen. And with that, I just want to thank you for listening to us today, and I can turn the time back over to Mark and Tyler there.
Yeah, Ross, that was absolutely awesome. And I believe we got set up and we started working with you maybe about 4 or 5 years ago. But we initially, we initially launched our business and we tried to do this kind of stuff all on our own. And we were in business for like 3 or 4 months for that fiscal year. And for those 3 months that we weren't going, we ended up really just putting ourselves in a really bad position as far as like taxes and everything like that. Then we got set up with you, and you kind of helped us get things in order, get things right, and we've since been working with you. But it's been an absolute pleasure. And so for that, I really do encourage each and every one of you, if you are running a business and you're trying to do all this stuff yourself, it is the type of thing that is probably holding you back from growing your business. And it's also the type of thing that you should probably delegate and let a professional take care of. And so Ross and his entire team are just awesome at that. And so yeah, definitely grab the information right there, the email, the phone, get in touch with Ross or a member of his team, and probably make a move with it. It's probably going to help you run your business more effectively, just being set up properly, and let you really focus on the more important side of things that you should be focusing on. So Ross, we did have a one question that I saw that,
okay.
Let me pull up the questions here. So you were at the one slide about how folks are getting taxed for the different types of business entities, and Jeffrey asked, what about nonprofit corporations? Can you shed any light on that angle of it?
Yes, I can talk a little bit about that. I actually have a nonprofit corporation that I've set up and that I've been the president of for probably 10 or 12 years. Under a nonprofit organization, there are certain activities that you can run that are non-taxable, and those activities are, have to relate directly to what your charitable purpose is. If that charitable purpose, for example, was to foster education, then you wanted to raise funds for books to be able to give to people, or something that deals directly with what it is that that is your that your specific purpose. Those type of things you can run, and it's not taxable to the corporation itself. But let's say you have a president of that corporation, and that president pulls out a salary for working in that corporation. That doesn't mean that the salary that the president receives is tax-free. Again, that the corporation would have to set up a payroll. The corporation would have to pay that particular officer a salary of some sort, or hourly, however they want to do it. They would have to withhold the taxes and match them, and would have to send those into the IRS. So just because it says it's tax-free doesn't necessarily, it doesn't have any taxes that it has to be worried about. And also, if they do something that's not in relation to what their charitable purpose is, and it's just they're out there just earning money for some other reason, that money is taxable to a tax-exempt organization. So it's not like, okay, I'm going to get myself set up as a tax-exempt organization, and then I'm going to run on, make all this money doing all these other things, and I'm going to be able to take it out tax-free. Unfortunately, that doesn't work.
Gotcha. Yeah, and Jeffrey, probably your best
help?
option would be to kind of reach out to Ross or one of his teammates and kind of speak more directly about that. But I hope that shed some light on it. Ross, I really do want to appreciate you hopping on here with us. We've had some really cool feedback coming in the questions from folks just saying, congratulations, this is an excellent webinar. I've taken a lot of great information from it, and quite a few of those have came in. So I really do appreciate it. Ladies and gents,
Great.
Thanks so much for joining us on here, and I will do my best to get the replay. This is the type of thing that you'll probably benefit from watching again. Before we close out the webinar, I'll give you one more minute. Make sure you write down the information that Ross has there for you, and if you're in the right position for that, definitely get in touch with them. And we highly recommend these guys. We've been working with them just about since we got into business ourselves. I wish we would have started working with them right before we actually got into business for ourselves and started making money. But you definitely live and learn. But really, whatever position you're at right now, if you do not have somebody helping you out with this stuff, I highly encourage you to get things set up properly, and really focus on the more important things and actually generating your business some revenue. So, Ross, thanks again. It's been a great pleasure. All right, take care, everyone.
Thank you for letting me be a part of it today.
It's our pleasure. Bye, guys.